May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily. QuantBox, your macroeconomic quant in a box. It's a very, very, very powerful tool that gives you a fundamental bias, which tends to keep you out of trouble if you trade in the direction of the bias, because it means that you might resist buying when the bias is bearish, or selling when the bias is bullish. Trading the direction of a fundamental bias is very important. The difficulty is collating the data to have a fundamental bias. There's so much stuff that you have to have. The cool thing about this tool is it gives everything to you. A 1 week trial is just $7.90. If you've been following my videos, then you know how we use these tools and what this tool offers, and the different data points it brings in at the click of a button. That's really cool. But before we jump into that, let's have a look at our watch list. So yesterday we had a look at a couple of pairs. We were looking at our CAD yen. We spoke about, let's just go look at CAD yen over here. We spoke about CAD yen coming down to that S1. We still said potential. Look at that. See, R1, S1. We said either there or it could come down to here. Didn't really make it all the way there. Or it could be coming down to the monthly S1. And we got the S1 just as we thought, right? R1, S1, isn't that cool? Now, the job for today was identifying, do we get out? Is price still going towards the S1? Or do we get out at the weekly S1? Let's take a look at our watch list quickly. So what we said was keep an eye on a level. You can see there, the level I drew yesterday was just a role reversal at the time, okay? What we're really paying attention to is any level that's been broken that has then become support. Now, you can see price is currently at this level right now. So pretty much, well, we were sort of down here in the previous session. And I said, don't sell here because, like, you know, you at target, right? And you can see there, selling really was not worthwhile because we should have sold up there when we got the opportunity to do so. So, looking at this now, has price made a higher low? I don't see a higher low being formed yet, but there are things to be concerned about. You can see here on the left-hand side, price having broken this. Not great. If you just put a take profit at WS1, you get out there, then that's fantastic. Beautiful. Stunning. Okay. You can see here there's various levels where price has broken resistance, but notice how price never tested that as support on the right-hand side. Okay, so we've had no higher lows yet. We've still got this resistance over here. Price has kind of broken it. We've got the support left-hand side. It's a bit messy. Your 21 is above your 55. Taking a look at an H1 time frame, we can see a bit better, a much clearer picture. In fact, what you can also do is you can also look at it like this. Let's go back to our CAD yen pair. So we can see on the H4 time frame, you kind of got this range. Okay, so we're looking at this and saying, do you treat this as a range in the same way you treated that as a range over there? And the answer is yes. So looking at this over here, you can see that we've come down to this level, and price has definitely stopped making lower lows and lower highs. Price coming down, and then look how it breaks this resistance. But it hasn't turned that resistance into support. So what one would expect in normal situations is price to pull back there and test that level and then go up. That might happen, that might not happen. We're not too sure. Ultimately, any level that becomes support should be a concern. At this point in time, we don't have a level that has become support yet. So if you are still in this trade, what you're looking for is any level that becomes support once it's broken that level. And as mentioned, you got this level over here, which has kind of become support over there. That's a concern, right? So that might have been when you got out. If you're still in because of this level over here still being in place, that's fine. You're looking for some kind of higher low, price pulling back down to there again, and then price making a higher high, price coming down there, then price making a higher high. Now, the problem is, if you wait for the higher high after the price comes down there, you end up losing more profit. So I think, you know, one of the things you could consider is that the target was the S1, price hit the S1, and price stopped. That could be your indication of it's time to get out. Alternatively, wait for price to come back down and test one of these support levels. You can see here, what's interesting here is that price tested the support level, price came up, made the higher high, price is now broken, it's currently breaking the support level over here on the left-hand side. This candle hasn't closed yet, okay? So I think one of the things I said yesterday was, you know, just taking profit there might not be a bad idea. So yeah, you're looking for price to come back down and test those support levels. It's difficult to say exactly what's going to happen because, you got to wait and see what happens, what transpires, but at least you know what you're looking for, okay? And at least you didn't sell at that roll reversal earlier yesterday, okay? Looking at the rest of our watch list, interesting stuff going on. So, you cast a few lines in the water, you see if you get any bites. Our Aussie USD, we were looking for price to break out. There's the breakout, okay? Price came back up to resistance over here, 21 EMA below the 55. So if you sold that and you lost money, well, let's have a look and see how you could avoid selling them. Remember, I always say to you, verify everything on lower time frames. So what you do is when price gets to that resistance, you jump into an M5 and you're looking for an indication of bearishness on M5. So you see over here, we just jump into this over here. So you can see that price coming down. Okay, so price comes up. Let's make sure we get the right candle there. So price comes up. Okay, so price comes up, closes at that resistance. Okay. At that point in time, you're saying, okay, cool, I've got price closing resistance M15. Am I bearish M5? Now, at this time, of course, we're talking like sort of 3:30 in the morning, which was fine. We were expecting it to happen during Asia. So looking at that, you can see price comes down. Okay, cool. I don't see any higher lows or any reason not to be bearish, except for the support left-hand side. That is a concern over there. You can see price closing at that support. Okay. And ultimately, what you're looking for is if prices come down, looking for that lower high. You can see price pulls back down, higher low off of the support left-hand side. Those are indications of bullishness. Okay, price closing at that support over there and over there. Looking at the M1 time frame, let's see if that's a bit clearer for us. Going left over here. So you can see here price comes up into that resistance. And you're looking for an indication of lower low, lower high. Price sort of ranging over here. Price breaks down, pulls back up, breaks that resistance there. Price breaks down, pulls back up. So not you can see what you're looking for here is you're looking for price to break that resistance and resistance to become, support to become, price breaking the supports and then support to become resistance. So price ranges, you wait for price to break support, it breaks support, comes back up, but it breaks that resistance. That's a caution. Okay, why is price broken resistance? Then you look at price, it ranges again, price breaks out. You're then looking for price to close at this resistance. Price doesn't close that resistance. So at no point in time did you have a lower high on the M1 and on the M5 when price came down, closing that support would have been a concern and closing at the support over here would have been a concern. So verifying that all the way down the time frame would have helped. Okay, cool. Also, you could have taken a look at that on the H1 time frame at that time and just had a look to see did the H1 time frame make sense. So that was where price broke out. Okay, price broke out, price pulled back, price sort of closing at the bottom of that range. And at the close of the H1 candle, you could have then looked at M15 and said, okay, what does M15 look like? And you would have noticed at that point in time, that price was coming down. Okay, that's cool. Off of 21 EMA. So therefore, we should see lower lows and lower highs on lower time frames. Just take this out quickly. Let's get rid of these last two lines here. Look at the M5 time frame, and we see at that point in time, this is now going back to the M5 time frame, where suddenly price breaks out of this range, pulls back up, breaks that resistance there. That's a caution. Okay, and then when price comes down, look left-hand side, not really seeing any support. This wick over here is concerning. Okay, that's over there. It's not great. So then you sort of look and say, well, okay, lower lows and lower highs, though. What's the problem, right? Maybe that doesn't support. What does the M1 time frame look like? And looking at M1 over here, we can see that you would have verified price not breaking that resistance. Sorry, not closing that resistance, price breaking that resistance, and price coming down. And then as price came down, we said, okay, well, that's fine. If this is bearish, I want to see a close of this resistance over here. And you can see there, you get a close of this resistance here. You can see price comes down, price greens up. But your problem is, let's look and see here, where's your support? Where are we now? Over there. Yeah, that over there is concerning. So you can see that we get price coming up to that resistance, price coming down, price coming up. Tricky. The way in which you would have verified this is based on the fact that price break that resistance over there. And then price coming down to the support over there, and then price closing at resistance. Really tricky one. So looking at that over there, though, again, position help. But we did say yesterday, price breaking out of this range, price breaking down, coming back up to resistance, could break the support there because of the fact it's been ranging. It was a challenging one for sure, no doubt. Cool. So that was Aussie dollar USD. Let's take a look at the Aussie Swissy. Here we're waiting for a breakout at the bottom of the range, and you can see there price didn't do that, so you wouldn't have taken that one. You can get that off the watch list. You can close this off the watch list as well. This one we're still waiting for do we take profit on that or not. CAD Swissy, we're looking for a pullback to resistance. Same thing over here. You can see price pulling back to this resistance, 8 o'clock candle. Okay, so then verifying that down the line, we got price pulling back to that resistance, and then on an H1 time frame, you would have had at the market open. So the 8 o'clock candle, this candle over here, closing at 12 o'clock, is for the New York market open. So you go forward to, you can see there, price coming down. Okay, really close to profit taking zone. Not fantastic. Not at support though. Okay, so you would have been looking at that lower time frame for an indication of lower lows and lower highs. And at this point in time, you can see that price comes down, price comes up, price comes down, and you can see here on the left-hand side, you got this support that price is now sitting at. And looking at an M5 time frame, you can see that, what you got over here, price comes down, you got this higher low over here, price comes up, comes down, makes a higher low. And so before that makes a higher low before hitting the 21 EMA, which is not bearish. So M5 time frame here would have verified that not being bearish. Your M1 over here, same story. Let's take a look and see over here. You got the support left-hand side right over there. So I would have told you to stay out of that trade. Then going on to the next one, we had so many pairs on our watch list. You can see for pound CAD, price over here, this red candle did not close at support. It closed just above support. Your support's over there. And then following candle then broke that level. So you never would have taken that one. And then if you look at the Euro CAD, we're looking for price to close that support. Price actually broke that support. So you wouldn't have taken a look at that one. And then over here, we were looking for price to pull back down and make the higher low, and price came down. And you can see there, this candle here didn't really close its support. You might look at those wicks over there and said, hold on a second, is that support? Then taking a look at a lower time frame, H1, let's look at that bias candle was for London. So H1 going into London, so that'd be 10 o'clock, 8, 9, 10, there you go. So price sitting at the support over here, and then the price coming up, and then price coming down to that support over there. Fair enough, you got beautiful support. Looking at the M15 time frame, looking for higher highs and higher lows, and you can see the problem there is 21 below the 55. Price never broke up to make a higher high and a higher low. That 21 below the 55 indicating that it was bearish. Okay, cool. So you would have left that one alone as well. So you can see how the really difficult one was the Aussie dollar USD. That was a tough one, but the rest of them were pretty straightforward. In terms of where we are now, let's take a look at our pairs. So from a fundamental perspective, our dollar pairs look as follows. Euro dollar coming through the bias of neutral, pound dollar, neutral, USD CAD strong buy yesterday, it's still a strong buy. Aussie dollar USD strong sell yesterday, still a strong sell, and Kiwi dollar coming through with a sell. So you can see Aussie dollar USD, we looked for that resistance, it didn't work out. Let's put this back inside a range here. Okay. I think the best way to have avoided the Aussie dollar USD was simply saying don't trade in the middle of the range. Easiest way of doing it. Sell up there, buy down here. But, we try to verify a sell over there. We look at the opportunity, price being in position with a bearish bias. It didn't work out. Cool. So we're going to leave that alone inside a range. Kiwi dollar. We can see they were leaving inside the range as well. And then the USD CAD, we know that USD CAD is completely out of position for a buy. We're down here again. I don't like this at all. So I'm going to put this inside a range and leave that alone. Okay, cool. Yen pairs, seasonally, we're looking for bearishness. You can see their price is now sort of stopped over here. And not a massive, I'm not going to sell that now, that's for sure. So going to leave that alone. Look at that consolidation. Not happy with that. The CAD yen also, this is the CAD yen we're looking at just now. So leave CAD yen alone. We're really in that trade or looking to get out of that trade. Euro yen, you can see euro yen now coming back down to the support over here. Broken this support. We're looking for a lower high so we can sell this later on. We haven't got that yet. And then pound yen. Looking for that lower high so we can sell this later. Nothing yet. Kiwi yen, and we can see their price coming off the top of the range. Price pulling back up. We're looking for a pull back. We haven't got a lower high yet. Looking for price to close at a roll reversal or a moving average. And that'll be an indication of us giving an opportunity to sell that. Everything quite messy after a week of central banks. So I think what I'm going to do today is just keep an eye on my watch list, which is very specifically the CAD yen. And let's see how things have settled tomorrow as we go into as we sort of close the week and go into next week. Monday might be an interesting day based on the change of positions according to what's happened with central banks this week. And we'll take a look at that in closer detail when we get to that time. In the meantime, stay patient, stay disciplined, stay liquid, and I'll see you guys later.